You know that feeling when you look at a market chart and it's just a chaotic mess of lines going everywhere? It can be totally overwhelming, right? Well, what if I told you there's a tool that can cut right through all that noise and actually show you the story the market is trying to tell? This is such a classic quote, and for a really good reason. It perfectly captures the two big forces that are always at play. You've got the short-term popularity contest, that's the voting machine, driven by news, hype, and speculation. And then you have the long-term fundamental value, the weighing machine. And these two things are almost always fighting each other, which creates all that noise we see on the charts. That's the big question, isn't it? What if you could actually see the difference between just a passing fad and a real solid move in the market? Well, believe it or not, there's an indicator designed to do exactly that, to visually pull apart the short-term traders from the long-term investors so you can see what's really going on. Alright, so here's what we're going to cover in this explainer. We're going to break down something called the Guppy Multiple Moving Average, or GMMA. We'll look at how it gives us this kind of X-ray view of market psychology. We'll identify the two groups that are always in a tug of war, and we'll learn how to read their interactions. And most importantly, how to use all this to figure out how strong a trend is and when to be cautious. Okay, let's dive right in. So first things first, let's get our heads in the right space. Don't think of the GMMA as just another complicated indicator with a bunch of lines. I want you to think of it more like a visual story, a way to see the behavior and really the conviction of everyone who's playing in the market at any given time. Okay, so what is this thing technically? Well, the GMMA uses a bunch of moving averages, 12 of them to be exact. But don't get hung up on the math because its purpose is actually brilliantly simple. It splits the market into two very distinct groups. And that's what lets us finally see how the short-term speculators are acting compared to the long-term big money investors. Now, the real genius of the GMMA is that it doesn't just throw 12 confusing lines at you. No, it bundles them into two simple, easy-to-read groups that we call ribbons. And you can think of these ribbons as the two opposing teams in the market. So let's break this down. On one side, you have the short-term ribbon. Think of this as the fast-moving crowd, the speculators, the day traders. They're quick, they react to news, and they create the short-term momentum. On the other side, you have the long-term ribbon. This one represents the big players, the institutions, the pension funds. They move slow, they're stable, and they're the ones who establish that powerful underlying trend. Okay, so now we have our two groups, right? The traders and the investors. The real magic happens when we just sit back and watch how they interact with each other. Their relationship tells us pretty much everything we need to know about the market's health, and it usually falls into one of three key states. First up, and this is the one you really want to see, is a strong trend. This is what it looks like when both ribbons are wide, they're fanned out, and they're moving perfectly in parallel with each other. I mean, this is a picture of total agreement. The short-term traders and the long-term investors are all on the same page, pushing the price in the same direction with a ton of conviction. Now, the second state is what we call consolidation. This is when everything gets messy. The ribbons get squeezed together, they get tangled up, and they just start drifting sideways. This visual is basically screaming at you that the market is confused. Buyers and sellers are in a deadlock. There's no clear winner, and the trend has just completely fizzled out. And the third state is a potential reversal. This is a huge one. It happens when that fast, short-term ribbon makes a really decisive move, and actually cuts through the slow, long-term ribbon. That crossover is a massive signal that there might be a major power shift happening in the market, where the sentiment of the traders is starting to overwhelm that old established trend. Okay, so out of everything the GMMA can show us, this is probably the most valuable piece of information for most people. How do you look at a trend and know if it's the real deal, or if it's just some temporary fake out? Well, the GMMA gives us a super clear visual answer. It's really just a simple three-part check. First, you look for a wide, healthy separation between the two ribbons. The wider that gap, the stronger the agreement is between the two groups. Second, you make sure they're moving in parallel, which confirms they're working together. And third, you check the angle. A steep angle, like 45 degrees or more, shows you there's real aggressive momentum behind the move. That separation, that gap between the ribbons, that is your visual measurement of market conviction. And actually cuts through the slow long-term ribbon. That crossover is a massive signal that there might be a major power shift happening in the market, where the sentiment of the traders is starting to overwhelm that old established trend. Okay, so out of everything the GMMA can show us, this is probably the most valuable piece of information for most people. How do you look at a trend and know if it's the real deal, or if it's just some temporary fake out? Well, the GMMA gives us a super clear visual answer. It's really just a simple three-part check. First, you look for a wide, healthy separation between the two ribbons. The wider that gap, the stronger the agreement is between the two groups. Second, you make sure they're moving in parallel, which confirms they're working together. And third, you check the angle. A steep angle, like 45 degrees or more, shows you there's real aggressive momentum behind the move. That separation, that gap between the ribbons, that is your visual measurement of market conviction. And finally, we have to have a little reality check here. No indicator is a crystal ball. And it's so important to understand what the GMMA does really well, and maybe more importantly, what it doesn't do. So the real power of the GMMA is its incredible clarity. It gives you this amazing visual summary of a trend's strength and the whole dynamic between the different players in the market. But, and this is a big but, its main limitation is that it's a lagging indicator. Because it's built on past price data, it confirms a trend after it has already started. It does not predict what's going to happen next. It clarifies the present. It doesn't forecast the future. So at the end of the day, the GMMA is really a powerful lens. It takes a complex, chaotic chart and turns it into a clear story about conviction, about indecision, and about shifts in power. It doesn't give you all the answers, but it sure does help you ask better questions. The real value comes from what you decide to do with that new clarity.